Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, December 5th, and I wanted to look at about 6 different markets today and really analyze and look at what happens based on the first what we call major structure of the day. And before I do that, let me give just 1 minute of context here in that with the software that we have, there are various pieces of evidence that we look at, and there are several real-time pieces of evidence that form on the chart, and those are what we call aggression bars. That's kind of our first building block. Also high velocity moves. We have real-time support resistance zones, real-time deceleration or divergence indications, and then a real-time directional filter as well. We also like to put things in bigger picture context. I'm not going to get into that right now, but all of these pieces kind of come together, and the more of the pieces that come together, the better evidence that you have, the better decisions that you can make. That's the concept. So what I want to do today is I want to take basically everything off of the charts except for these aggression bars here, and I also want to keep on the high velocity moves as well. Now I'm going to remove the level 1 aggression bars, the moderate aggression, so I'm just going to leave on the chart the level 2 aggression bars, which is strong aggression, level 3 aggression, which is extreme, and then high velocity moves. Those are what we call our major structures. And let's take a look. I'm going to look at the 2-minute chart. Just you could do this on any time frame you wanted, but just look at the 2-minute chart today on several markets, and let's analyze the first major structure, so the first one of these structures that we find in the day, and then let's ask ourselves, do we have follow-through or do we have rejection? That's kind of the first question that we talk about in our training. Do we have follow-through or do we have rejection? If we have follow-through, most likely the market's going to continue in that direction. If there's rejection, most likely that was capitulation. The market's going to head in the opposite direction. So with that said, let's take a look. Let's start with the ES, and then let's look at several markets. Okay, so again, this is the ES, or E-mini S&P 500, and we're looking at a 2-minute chart. And again, I've taken everything off of the chart except for level 2 aggression bars, level 3 aggression bars, and high velocity moves. So let's look at the first major structure of the day is this level 3 buying bar, which is extreme buying aggression. So we want to ask ourselves, do we have follow-through? In other words, does the high get taken out and do we even have a full bar above that? Or do we get rejection? In other words, do we get the low taken out and then even a full bar below that? Okay, so that in itself, especially the first one of the day, is going to give us a pretty strong indication early on at least. So you can see we had no follow-through above, then we had some follow-through below, a full bar below, and that's telling us in the short term bears are in control of that market. We even have a trade when you get a level 3 bar on the high of the day that gets rejected, and you get a full bar below it. We say that a really good place to get in would be the retest of the low of that bar, which you can see happen, here, here, and here. So, again, that's the idea. First, put the market in context, then look for ways to get into the market. Look to hone in on low-risk trade opportunities. But I'm not going to get into the trade opportunities right now. I just want to talk about this follow-through. And you can see that it continues through the rest of the day, where we have a high-velocity move and a level 3 bar with follow-through, a level 2 bar with follow-through. This level 3 bar, however, we get no follow-through. In fact, get rejection, then get a full bar above. That's telling us, okay, the tide has turned a bit. Then you can see that some buying aggression comes in with follow-through, where the low holds. We get movement above the high of the market, and then another level 3 bar with follow-through, a level 3 bar with follow-through, high velocity moves with follow-through, and so forth. It's not until the end of the day where we start to get another selling structure, and the market short-term sells off. So that's kind of the idea with the aggression bars there. So let's look at another market now. Let's look at another index. We'll just look at the Russell. Obviously, it's an index market. It's going to be very similar, and you can see that in this case, our first structure of the day, we had a little back and forth, which is often going to happen in the beginning of a day. But our first structure is a level 3 selling aggression bar, and we want to ask ourselves again: do we have follow through, or do we have rejection? And you can see in this case we have a little bit of a back and forth. We even have another test of the high, and that's not uncommon early in the session. But before we actually get some follow through is on the downside. So again, short term, you got to say the bears are in control. It's not until later on where we have rejection of this level 2 selling bar and then some follow through on some buying structures that we say that the bulls are back in control. Again, you're not necessarily going to trade directly off of this information, though you certainly could. It's just helping you really make sense of who's in control of the market, giving you context. Because again, if you have context as to the likely direction of the market, you can certainly make better trading decisions and keep yourself on what we call what we say, put time on your side, or keep yourself on the right side of the market a little bit more easily, or with a little bit more probability, certainly. Look at another index again. Here's the YM. Similar looking, obviously. First major structure is a level 2 buying bar. No follow through. We then get some rejection in here. Sell off. Again, this level, here's another major structure, this level 3 selling aggression bar. No follow through. We start to get some movement above the high of this bar in fact, on some extremely aggressive buying. And then we continue to get some follow through. This market has a pretty good rally. So you can just kind of see how this works, and how, especially looking at that first major structure of the day, do we get follow through? Ask ourselves, do we get follow through? Do we get a rejection? It can give us a pretty good clue. So, okay, let's look at the crude oil. Now today, in crude oil around 10:30 Eastern, we have a report that comes out. So it got a little bit wild. Here's our first major structure of the day, which is this level 2 buying aggression bar. You can see we got rejection. We did have some back and forth because we got rejection on this bar, rejection on this bar. So we kind of had the old two-step around that report, which is not uncommon with major news, like an FOMC on the indexed market, for example. But you can see that we finally got some follow through below this one, and then another structure with follow through. So we had a bit of a sell-off there. Then we had some buying come back into the market, as you can see. So that's the crude oil. A little bit different because there's major news on the crude today, but same idea would hold. Here's gold. So we ask ourselves, first major structure of the day is a level 2 selling bar. Do we get follow through or do we get rejection? Well, you can see we tested the high of that bar. We did not get a full bar above. The high held. Then we take out the low on some extreme selling aggression. That high holds as well. We're starting to get full bars below. Same idea here. Now we do have some back and forth, obviously, but you can see that the first major structure of the day gives us a pretty good handle, at least in the early going, as to who's in control of the market. And you can see again with this idea of, do we get these? We had a major selling structure. As we're going to test the high of that, we get some buying structure that we couldn't get any follow through really. When each of those buying structures came in, we had another move lower. It wasn't until this level 3 buying bar we started to get some. We tested its low, it held, full bar above, nice rally. So that's kind of the idea here. Again, this is our first building block that we talk about, just looking at follow through or rejection on these major structures. Let's look at another market. Here is the euro. And this is obviously going back, this is pretty early in the morning where I live in the US, but certainly daytime in Europe. We have our first major structure of the day is this level 2 buying aggression bar. You can see no follow through. We get some rejection. It's telling us, at least short term, the bears are in control. That's confirmed with follow through of this level 2 bar, rejection of this level 2 buying bar. And you can see that we just continue. Every time we get a selling structure, major selling structure, we get follow through until this point in here where we start to see a little bit of buying. But in general, the sellers were very much in control of the market, as you can see. Let's look at it a little bit different. Let's look at the bonds. Here's a 10-year notes. First major structure of the day is a selling bar, no follow through. We get a buying bar there. We start to get some follow through higher. Selling bar with no follow through, buying bars with follow through. Selling bar with no follow through, buying bars with some follow through. So the bonds don't move much, but that same idea holds. And you can look at basically any market, any time frame, and just ask yourself, when you see these aggression bars, do we have follow through or do we have rejection? That's giving you a pretty good handle on the likely short-term direction of the market. Then when you add other pieces to the puzzle, whether it's a methodology that you're currently using, whether it's the support resistance zones that form, the filter that forms, decelerations, whatever the case may be, there's a lot of other ways that you can then hone in on finding really good trade location. what I want to just talk about is kind of that first building block that we talk about, which is follow through or rejection, giving us a pretty good handle on the short term market direction. If you can have a good handle on the short term market direction, obviously you're going to increase your edge. If you can increase your edge, that's really the name of the game. So if you have any questions about that, or want to see other charts, or whatever the case may be, don't hesitate to contact us, and we will get back to you with answers. All right, have a great evening, and we'll talk to you soon. Thanks.